Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and in this video we're going to go through the 3 stocks that I'm buying December 2021, and it's going to be a little bit of a twist. So the first stock is actually going to be a group of stocks that have all been beaten down within the same sector, being the financial sector, and then a couple other ones as well that I'm going to be eyeing for this month, December 2021. So if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything investing from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. So like I said, the first group of stocks that we're going to be talking about are the financial stocks. So we're going to be talking about PayPal, Square, JP Morgan Chase, and Berkshire Hathaway. So the first one, PayPal, is now trading at $186 per share. And if we look at the last 6 months, we can see this one has just been falling off a cliff as a large cap. It has a market cap of $219 billion, has lost 28% over the last 6 months. We had a 52-week high of 310, and we're now trading at less than 2/3 of that price at 186. And we can see since that peak, we've gone down pretty much 39%, almost 40% down. Even when you scroll down and look at the top stories, you see even in this headline over here, it's too cheap to ignore. Everyone is looking at PayPal, but it keeps on going down and down and down. Until this one eventually does recover, no one wants to touch it because it keeps going down. But eventually the stock is going to go well above 200, 210, 230, 250, and people are eventually going to be like, wow, I could have bought this for 180 or 170 if it goes that low, 150, and so on. So yes, it is impossible to time the bottom, but one of the many lessons that I've learned in the stock market is that if you like the price of a stock right now, but you're waiting for it to even go even lower, you're definitely going to miss that bottom because you're never going to be satisfied because you don't know where that bottom is. No one knows where it is. And this was actually a stock that was on my November 2021 stocks to buy, and it was actually at the time like over $200, and I was still saying to buy it because it was so well off its 52-week high and it has huge potential over the next decade. And the second stock in that first group of financials would be Square stock, or should we be saying Block, because Jack Dorsey's Square changes its corporate name to Block, and this came out on the 1st of December after hours and will take into effect on December 10th. And again, same kind of idea over the last 6 months. This one is down 13%, and that's from when the price was $220 6 months ago. It's gone as high as about $290, and ever since those 52-week highs, we're down 31% again. So anything financial processing has just gone down over the last 2, 3, 4, 5 months and hasn't been favorable in Wall Street's eyes. But I ask you this, does Square or Block and PayPal, do they have a future in the fintech space? Absolutely. As these financial stocks are so important to our economy and overall GDP, how can you buy anything without a financial processor? Yes, I understand the blockchain and whatever, but still, we're not quite there yet. We still have a long way to go when it comes to blockchain. And hey, PayPal and Square, Block have a lot in store when it comes to blockchain services. Alright, and the next 2 stocks, JP Morgan Chase and Berkshire Hathaway. Unlike PayPal and Square, which are growth stocks, these ones are value stocks. I'm going to take you guys to the Vanguard Mega Cap Value ETF, MGV. And this is one of my favorite low-cost value ETFs, as they have all the big value names. And actually, if you look at number 1 and number 2, you have Berkshire at 3.54% of the fund, and JP Morgan Chase at 3.53% of the fund. JPM, if you look over the last 6 months, this one hasn't gone down as much, but it's also not as volatile as stocks like PayPal and Square, which are growth names, as investors are trying to figure out how much premium they want to place on such a growth name. Whereas a value name like JPM actually also pays a dividend of a yield of 2.46%. It's just been trading sideways for the better part of the last 6 months. And in my opinion, if you don't want to invest in an ETF of all financials like XLF, which has all the major US banks in it, JP Morgan Chase is often looked as the best bank in America. And as we saw during the pandemic crash, the banks will always get bailed out in the United States. They most definitely aren't going anywhere, and when it comes to regulators, they always have them in favor. And this stock is also a beast with a market cap of $479 billion. And the last stock I want to show you guys in terms of financials is Berkshire Hathaway. Another beastly company with a market cap of $625 billion, and actually this one doesn't pay a dividend even though they could, because what they do with their profits is they just reinvest into the company. So in a sense, it's kind of like a growth stock, is that they're reinvesting into their own company, piling up those dividends, piling up that cash, and just throwing it into more and more investments and then growing over time. It's kind of like a portfolio within your portfolio, except you're not paying a management fee like you are with any ETF. You have someone who's sought after as the best investor of all time, as Warren Buffett, as your fund manager. And yes, Warren Buffett isn't going to be here forever, but he has a lot of people in the pipeline that know exactly what they're going to be doing once he steps aside. And over the last 6 months, this one has gone down 3.54%, so nothing too significant. It's hard to go wrong with a conglomerate just like Berkshire Hathaway. Alright, the next stock is actually another conglomerate that I want to share with you guys. That is Disney. And we all know Disney. They have their theme parks, their studios, their cruises. They are an absolute beast. However, the stock price hasn't been showing that, especially over the last half a year or so. This one's actually up 3%. However, over the last, let's say, 6 months, same kind of idea, it's down 17.25%. And we can see, especially ever since their earnings report about a month ago, this one has really felt the pain, down about 17%. It's trading sideways 170, 180, 170, 180, and then after that earnings, woo, mostly on guidance. And that's pretty much been the theme when it came to earnings this past quarter, as companies were reporting pretty decent earnings, but when it came to their future guidance, investors just weren't satisfied, especially with what the prices and valuations were at the time. So yeah, of course, people are feeling pain right now, but this makes sense that prices are getting a little bit of a breather and a little bit of a reset. Because the stocks just go up and up and up and up, the future returns will be less and less and less. So when we get a pullback in the short term, that can only be good for the long term as long as the company is a high quality one. And of course, Disney is just that. No yield on this one, but it does have a market cap of $266 billion. And I often compare this one to Netflix, which has a market cap very similarly at $273 billion, except for I just don't understand the moat when it comes to Netflix, as Disney does the same thing with Disney Plus, but it has so much more for such a similar price in terms of market cap. The last stock I want to show you guys, I'm actually going to group them again as two because they're so similar. The first one being Facebook stock, and this one has just been pummeled down as well, as it reached an all-time high of about 385 earlier this year, back just before that September correction, where a bunch of stocks went down, but especially Facebook kept getting bad news after bad news with the whistleblower, and it just hasn't been favorable. It actually was above $1 trillion at a certain point, and now it's under $900 billion, now trading with a market cap of $860 billion. Facebook is a strong investment of mine, and I will be forced to buy more if it does continue going lower. Although I don't necessarily have the cash for it right now, I will find a way to buy more if it does continue finding weakness. But Facebook, and I should be saying Meta Platforms, is a gold medal stock. They make so much money, they have so much cash on their balance sheet, and they're trying to revolutionize the next big thing in the internet, as we know as the metaverse, which I still can't completely get wrapped around my brain. And not to mention, even when this one was trading above 350, its valuation measures were still very favorable in comparison to a bunch of other mega cap companies, especially with this one being near $1 trillion and still being a pretty good deal. So yes, in the short term, a bunch of these stocks have really sucked. However, eyes on the prize, long term, these could be really big winners. And the last one, just since we're talking about Facebook, I want to talk about another FANG stock, would be Amazon. And if we look over the last year for this one, it's pretty much traded sideways, up about 7% as the worst performing FANG stock over the past year. And it looked like it was going to be breaking out this past month, as the rest of the broader markets looked like they were going to up until last week, and then we've gotten all the bad news and the market's been super volatile ever since. And Amazon is an absolute beast of a company. They have so much growth left in the tank over the upcoming decade. Even as big as they are right now at $1.75 trillion per market cap, they still have so much more room to go, easily above $2 trillion, probably $3 trillion within the next few years. The price might hang around this $3,500 mark for a while now, but I won't be surprised if the stock is well above $4,000, $4,500, $5,000 in the upcoming few years. And yes, just like all the other stocks I'm mentioning right now, these ones can go down a lot more than they are right now, at least in the short term, but long term they're going to be much higher in my opinion. Alright, and that's the end of my video. Let me know in the comments below, are you buying the dip on any of these stocks? Are they good buys? Are you not touching them? Let me know in the comments below. As always, subscribe, like, and I will see you in tomorrow's video.